let's move into this dream that has been talked about in the United States for years, that people will no longer have to file a tax return. And everybody says that's impossible. So tell me how it works for you. What is filing a tax return or mean in New Zealand?
So New Zealand is lucky in that it's, we're 5.3 million, so a mid-sized sort of state level, and it isn't. There's no state taxes, if you like, because
Right.
we're just one entity. So that makes it easier. 90% of people in New Zealand don't file a tax return because if you're a wage and salary earner, maybe with some interest and dividend income, the Inland Revenue, so I'll call it the IRS because it's the Inland Revenue Department here, but the IRS has all of that information because it's provided to them by the banks and by the employers. Mm-hmm. So at the end of the year, they will send you a it's like a tax summary. It's like, this is based on the information we have. This is what we think that you owe or that we need to refund to you. If you agree with that, do nothing and we'll just send you the bill or send you the money. If you don't agree with it or have extra information that you need to provide, then obviously get in contact with us and tell us what's wrong. So that's 90% of the people. So the only people who are filing returns are people who have income that is like self-employed income, rental income,
right? A business of some sort,
and business owners. So that makes it, in terms of what are accountants doing, accountants are not doing individual taxes other than for people who've got rental properties.
Yeah.
So everybody else is in business, if you like. There are no deductions. That's probably the biggest difference. So we used to have a few, and 20 years ago the government legislated them away. So there's no deductions to claim. So from that point of view,
that makes it easy.
Yeah. And to be honest, I look at your tax system, and as a tax professional, it brings a level of excitement because there's so many things that so many ways you can add value as a tax pro in the US. Because there's always different ways of looking at a problem.
Because of the complexity of the law, because it's ever changing, and one day you're doing this and one day you can't. So
because when you started description, I mean, I'm sitting there thinking, well, the IRS knows how much everybody's W-2 is. They know how much the banks and interest are. It's all that. There's two things. I think there's well, I don't think the IRS's technology is probably as good as what you have with your agency. They're behind there. Then there's the distrust of a lot of people that they wouldn't get it right, or that somehow the government's going to rip me off or something before you even get to complexity. But the U.S., I don't know if it's 90%, but I would bet, and there's been this talk of why can't we do that? And I think some of it's just the politicians are never going to keep it simple enough. They just, like right now, I mean, we're trying to figure out how to not tax tips and not tax overtime and not tax and make car interest on American cars deductible. Not because that's necessarily good policy, but it won an election. So we've got to complicate our tax code for things that, you guys just don't think about.
I think the politicians in New Zealand have been very clear for a long time that you don't drive social outcomes through tax policy. You separate the two. You collect the money and then target it at the places you want to send it to. You don't use the tax system and the tax system's often a very blunt instrument with these things, because you end up benefiting people who you want to benefit and a whole lot of other people who you didn't want to benefit, who can ride on the coattails of whatever you've done. So